Hi, this is John Braconnier with Professional Realty Group. Stay tuned for your questions answered about the first-time home buyer program. Hi, this is John Braconnier with Professional Realty Group. This morning, having a conversation with Vivek Ahuja with the BMO. He's a mortgage specialist. And a lot of clients have asked me about the first-time home buyers program that the federal government has recently announced in the fall. So going to have a conversation. Vivek is going to provide some insight into that program and what it's all about. Also, we're going to talk about secondary suites, and if you're buying a secondary suite as an investment property, what is required in terms of financing to get into a secondary suite. So a good conversation, and so welcome, Vivek.
Thanks, Sean. Thanks for having me.
Yeah, so Vivek, I'm a first-time home buyer. I've heard about this program that the government has announced. So what do I need to know?
Well, this is for first-time home buyers, and it's an incentive program. It's a shared equity mortgage program, actually, where the government shares in your equity in the upside and the downside. So, for example, you buy a home for $400,000, and you get an incentive of $40,000. And when you sell the house, you sell it for $450,000. You have to pay back 10% of that, the value of the home you sell it for, so $45,000. If you sell the house for let's say $350,000, then you pay 10% of $350,000, which is $35,000. So basically, you're paying back based on the fair market value of your home after 25 years or at the sale of your house, at the time of sale of your house.
Okay.
So these are the two, basically, this incentive has to be returned back
to the government. But they either share in the profit or they share in
That's
the
correct.
loss as well. So
Absolutely.
if they do loan you a certain amount of money, they're going to take a bit of a hit if the market does come down somewhat.
That's correct, yeah.
Okay.
And this incentive has to be paid back at either the sale of your house or after 25 years, whichever is earlier.
Okay. 25-year period. So how much money do I have to put down?
Well, the clients have to come up with minimum 5% down payment from their from traditional sources, which is it can be gifted down payment. It's from their own savings or from RRSPs. So this is the minimum 5% down payment requirement, and they qualify for 10% for if they're buying a new home, and 5% for existing homes.
All right. So if I have a 5% down payment now, is the mortgage rate a little higher for this program, or is it very competitive?
No, mortgage rates are same. It has no impact on the mortgage rates.
Okay, well that's good to know.
Yeah.
That's fantastic, and of course still subject to the stress test, I guess.
Absolutely, yeah. All those terms and conditions, all those parameters are still the same. Right. And the only thing is that they get this incentive. It helps some clients to qualify for the mortgage they're looking for.
Mm-hmm. So I might have 5% of my own money saved up. Can I also get gifted another 5% to make a total of 10%? Does that improve my ability to?
Yes, clients can do that. Clients can put up to 9.9% if they want to take advantage for 10% incentive program. If they're buying a new home, for example. The maximum they can go is 9.99%.
Okay.
Because the file has to be insured.
Yes.
It has to be an insured mortgage.
Yeah.
It cannot be like if clients are putting 10%, it's not that they get 10% from the government and make it a conventional mortgage. It doesn't work like that. So the maximum down payment is 9.99%, minimum is 5%, and the maximum incentive under this program is 10%.
All right, so if I put in 5%, the government's going to put in 5%?
No, the government can still put 10%.
Oh, okay.
Yeah, it's not like a matching thing.
All
So
right.
if the clients are putting 5%, they can qualify for 10% if they're buying a new home, provided they meet all the terms and conditions of the program.
All right.
And they have an option actually to go with 5% or 10%. If they're buying a new home, it's not that they have to have 10%. They can go with 5% incentive also. So for example, clients who put 14.99% in the deal, they can still get the benefit under this program for the incentive for 5% to make it 19.99% total down payment.
And so is this program strictly for new home purchases, like brand new homes, or is it for, homes that are on the market that are resale?
Yeah, no, it's available on existing homes also. The only thing is that with existing homes, the maximum incentive is 5%.
Okay.
Yeah, the 10% incentive is only for new home construction.
All right.
Yeah.
And in terms of, if I'm going in with a relative of mine, we're both going to move into the house together, maybe a son or a daughter, or a father or a mother, we can go jointly and to purchase this house?
Absolutely, yeah. Co-signers are allowed under this program. So we can have a co-signer. The only thing is that co-signer's income will also be taken into account.
Mm-hmm.
Now there is a maximum income which clients can qualify for this program. The income requirement is 120,000.
All right.
So if the clients have more than 120,000 income, combined income, gross income, they don't qualify under this program.
Okay, so the qualifying income is 120, and that's if you and your wife combined are making 120,000.
Yeah.
That's the cap, the
That's the
limit.
cap.
If you're making over that, the government's not going to kick in for this program.
Absolutely.
You're on your own.
Absolutely. Then you don't qualify for this incentive program in
Alright.
particular. Yeah.
Yeah. And if you're, if you're a young person in your 20s, you're making $80,000. Your parents are going to maybe co-sign for
Yeah.
you. You could apply for this program and.
Yeah, if the combined income, including your parents, is under 120,
Oh, I see.
then you can qualify for this
Alright.
incentive program. Yes.
Okay.
Mhm.
So if your parents are retired and they just have maybe a lower retirement income, pension or something, but they're
Yes.
willing to co-sign for you, that might be a good fit.
Oh, absolutely, yeah. That
I
would
see.
be a good fit.
Okay.
I mean, we look at each application on individual basis and also check all the guidelines, terms and conditions for each application. So they're all different, and it's the best thing to contact the mortgage specialist and get them evaluate your situation.
Okay, and I assume this program is strictly for Canadian citizens?
Absolutely.
Yeah. Now, can they get gifted from a family member that's not a Canadian citizen?
Absolutely, they can do that. Gift can be from any immediate family member, even though they are not living in Canada.
Okay.
Yeah, but one more thing which I want to mention is that this program is available for clients on work permit also. So clients who are working in Canada on a work permit,
Yeah.
they are also eligible to qualify for these incentives.
Okay, well, that's good to know. That's good to know.
Yeah.
Is there anything else that we need to know about the first-time home buyers program?
Well, this is the basic requirement, as we mentioned or we discussed, is 120,000 maximum income. First-time home buyer. Now, first-time home buyer is not just the individual who is buying home for the first time. It could be, there are a couple of different situations. They could be going through, for example, separation or divorce. So if clients are going through separation or divorce, any marital breakdown, they can also qualify for this program, the incentive program. And also, if they haven't owned the home for last 4 years, then also they qualify
All right.
for this program. So there are a lot of scenarios where, and then again, as I said, it's better to talk to a mortgage specialist, a professional who can help answer all these questions and help you qualify under this program.
Okay, well, that's good to know.
Yeah.
I appreciate that. I'm sure my viewers appreciate that information. Hi, this is John Braconnier with Professional Realty Group. Stay tuned for your questions answered about secondary suites.
For sure.
Yeah.
Yeah, I appreciate it.
Second topic I wanted to talk about was secondary suites. So, first of all, there's a couple different scenarios. I have some clients who are seniors. They want to buy a home with a secondary suite that they can rent out to supplement their pension income. Another scenario is strictly investment. Investors want to buy the duplexes, up-down duplexes, or homes with secondary suites.
Yeah.
So what are the financial requirements, let's say, for the retired people that would like to buy a home? They're going to live in it, and they're just going to rent out the suite. What are the requirements for them?
So it's the same requirement, like they have to go through the credit application, income employment verification and everything. And then we do add some percentage of the income from the secondary suite. So it's 50% currently we are using. So these options are available. So it's a good option for
Mhm.
secondary suite because it helps them in paying off their mortgage, I guess. It's a source of revenue.
Now, does the suite have to be rented out already for you to take that second income into account?
No.
Or is it the potential for that suite?
We can use potential income also.
All right.
So even though it's not developed yet, it's on the plans, we can still use it. We get an appraiser opinion to provide us the appraised value of the secondary suite as well as the rental potential from there.
Okay.
Yeah.
And so then a person in that position, they could put 5% down, they could put 10% down, they could put 20, whatever they want.
Absolutely, yeah.
And then the financing will be adjusted.
Absolutely, yeah.
And of course, there's always that CHMC insurance requirement, I guess, if it's under 20% down.
That's correct, yeah.
Mm.
And this one, we have a program where when clients are buying a home, at that time they can add the cost of their basement or secondary suite into the mortgage.
Okay.
So that is an option available. It's a very good program. And sometimes you are able to do draw mortgage for that renovation part.
Right.
There are certain terms and conditions for that, but we have that program available where clients can get a draw mortgage just for the renovation part. So they get the possession of their home. Now they want to develop the secondary suite.
Mhm.
For that secondary suite, they can get draws. Like money can be released in different draw stages.
Okay.
Mm-hmm.
And I believe there's some program that is encouraging people to develop, if they want a secondary suite, there's some kind of like incentive through the city of Edmonton, is that correct?
And that's correct. That's the corner store program. So that's a good program which clients can take advantage of.
You know, what's it called again? The
Cornerstone. It's a
Cornerstone.
corner- Yeah,
Oh, Cornerstone.
Cornerstone.
Okay.
It's Cornerstone
All right.
program.
So if I have some clients that they want to buy an investment property, they need to turn, it's not, the suite is kind of semi-set up, but it's not quite, it needs maybe a new furnace or something to be done to it to make it legal.
Yeah.
They can apply for this Cornerstone.
Yeah, they can apply,
grant.
subject to, of course, city's approval. They can apply for this program. There are some terms and conditions. They have to have a renter in that suite, low income
Mhm.
earner.
Or low income earner. Okay. And low income is?
That is determined by the city again.
I see.
So your rental income from that secondary suite under the cornerstone program is normally 80% of the proposed rent. For example, the normal rent is $1,000.
Mhm.
You're probably able to charge $800.
Mhm. Okay. And how's that grant or that incentive, how's it work, how's it paid back? The city grants them some money towards that?
Yeah, that grant doesn't have to be paid back if clients have tenants in that secondary suite for 5 years.
For 5 years?
Yeah.
Has to be the same tenant or can be
It can be different
tenants? It
tenant.
doesn't matter?
And for example, if the property is not rented for a certain time during the first 5 years, then it has to be returned back on a pro rata basis.
Mhm. If the property is already an investment property for somebody, already has tenants in it, the tenants it's been rented out for the last 5 years, 10 years, and I have some clients that wanna buy that property, and they have to do some modifications to make the legal,
Legal
that
basement.
would qualify then for
Absolutely,
that program.
all the legal basement
Yeah.
suites or secondary suites would qualify.
And if you are an investor buying a home and you want to have a secondary suite, what's the minimum down payment?
Well, minimum down payment for any investment property is 20%.
Okay, and why is that?
Well, that's because insurer like CMSC or Genworth or CGI, there are 3 insurers, they don't insure rental properties.
Mm-hmm.
So that's the reason they have to put minimum 20% down because insurers will not insure it.
All right, okay. So as long as you're upfront, you're saying this is what I intend to do, and you apply for the mortgage, and then you can get the
Absolutely, yeah. We have
coverage.
actually I have done quite a few of these investors' mortgages. I helped a lot of investors buy their investment properties, get their mortgage financing in place. So yeah, I have a lot of experience handling different clients. I have been in the industry for 17 years, and as a mortgage specialist for the last 12 years, and I have more than 2,500 satisfied clients.
Mhm.
So a lot of variety of clients I have helped
Mhm.
in accomplishing their dream of home ownership. So I'll definitely be more than happy to help even investors or first-time home buyers, second-time home buyers. We have a lot of good programs with them.
Oh, that's fantastic,
Yeah.
because I know there's a lot of interest, to do this,
Absolutely, yeah.
and
Especially in today's market,
yeah,
yes.
yeah. I know there's older areas in Edmonton, like North Central, there's a lot of up-down duplexes,
Mhm.
some side-by-side.
Yeah.
The newer areas now, they're actually building houses that have those legal suites already set up for them.
Absolutely.
So there certainly is a market for
Yeah,
that.
legal suites is a very popular product in
Yeah.
today's market.
Good. Well, I really appreciate the time you've taken out to
My pleasure.
help answer the questions.
My
and,
pleasure, John.
Yeah.
Thank you.